Hello and welcome to Leviathan News. Today is December 21st, coming into the end of the year, but spirits are high and we have one of the most positive people in the entire crypto space here today. We have Cryptovestor.
How you doing, sir?
How you doing?
Good.
Yeah. I always say that Cryptovestor is like a breath of fresh air, just pulling us out of this bear market with
Single-handedly, right?
Single-handedly, exactly. With good vibes and positivity, which I think is necessary, right? Because I look at myself sometimes and I'm probably just a little bit too paranoid and doomer at points, but that's the wrong way to be, right? You can't.
The bear market has its effects, but I think we're starting to turn a corner. So I think people are starting to notice now. So it's good. 3 weeks ago, a month ago, wasn't so popular to talk about it.
I know. So you kind of have like come on this year, or like come out this year, or emerged, I guess the word would be, into a bunch of different communities. Over at Frax, you've kind of ingrained yourself, as well as Convex, Latin DAO, all over the place. So you just really make your mark this year.
Yeah, I did. I think I mentioned it before. I've been a long-time lurker, and I just there were things that I was seeing or understanding and seeing differently than others were seeing. And I said, well, why aren't I sharing this? Why aren't I focused on letting people know what I'm seeing? And, maybe I'm wrong. I don't know. It's possible. But, like there were things like the PayPal deal with Frax that people weren't really picking up on. And some of the things going on with Prisma and Convex that people they overlooked. And I just started saying, well, let me start sharing what I know. And I guess that became sort of popular.
Well, you come from a TradFi background, right?
Yes. Yeah. Hedge funds.
And what was like the aha moment for you that got you full time into the industry?
Well, I think it really was like using Ethereum on MetaMask and seeing that you could really earn yield and do different things other than just holding your crypto in a hardware wallet. And I think that was a key moment for me.
Yeah. And so was like the Curve Convex ecosystem the first that you came across, or were there others that you were looking at before?
Started with Olympus. And I guess everybody starts there. And, I fell down that rabbit hole. And then I remember them mentioning that one of the assets they wanted to acquire was Convex. And I didn't understand what that was, and Frax, FXS. And I was like, what are these two things? And then I got me down the Convex rabbit hole too. And then shortly after that, I started looking at FXS, and I realized that there was something much bigger going on here that, people weren't really paying attention to.
Yeah. Convex is almost like a protocol's protocol, right? In the sense that, like, if you're retail, you probably maybe adjacently use it, maybe to do yields or something, but really like it's powerful for the protocols that it builds into.
It's for the DAOs. It really is for the DAOs.
It's like a DAO's DAO.
Yeah, it is sort of, but I think some of that's going to start changing too now with what's going on with Protocol FX and their F assets, their farming tokens. That's something new that they're developing, and I think that's going to make CVX CRV an asset to really want to hold as a stable asset that earns yield. So I think it might start changing, but yeah, I think you're right. Obviously, I think you're dealing with large corporations, the PayPals of the world, Tridents, things like that are focused on either acquiring CVX or have some kind of interest in what CVX offers. So, but that may start changing. We'll see.
Yeah. Convex is like quietly the most powerful protocol in the entire space. I would say that.
I think it is, and it's just so undervalued. But what it does or what it'll accomplish, it really is an engine, a liquidity engine for, like, look what Frax can do with it. Now they're voting, with their Prisma, with their locked Prisma. That's going to be, really big for Frax ETH. And then as they start earning more FXN emissions, Frax will use the power there to vote for FXN. We haven't really talked about that, but that's like something big that's emerging, that's coming out of their new stablecoin that they're producing. They're going to be able to, send the emissions over to the Frax ETH pool, similar to what they're doing with Prisma.
Mm-hmm.
And I think it's going to be a big. It's going. Put it this way: I think that the FXN Protocol FX platform is going to be the best or highest yielding place for LSDs.
Oh, really?
And yeah, I think so. And I'll explain why. Okay, so right now you have, the F version and the X version of each of these assets, right? Like, for example, just to keep it simple, you have let's say we have like a F Frax ETH and an X Frax ETH.
Mm-hmm.
So right away, all of those deposits are some of them are going to be earning all of the yield of the Frax ETH's base Ethereum yield, right? But only the people that hold the F Frax ETH token are going to get that yield. So it's almost like it's splitting the token in two, like a 2-token model on top of a 2-token model. If that makes sense. It's a very weird concept, but because it's doing that, it makes any other Ethereum LSD a 2-token model now. And because of that, the yields for the F side, when you stake your F token or FXUSD, you're going to get yields that are in like 14%, 15%, 16%, those kinds of yields, all coming from the base Ethereum chain.
Yeah, it's pretty incredible. I was thinking, coming back to Convex, like Convex almost reminds me of like a Facebook, right? Where as in Facebook's turned into this massive aggregator for a marketplace. It's got chat, it's got Instagram, it's got all these different services that kind of plug into it.
Mm-hmm.
That can like benefit from the Facebook advertising system that's kind of built in the back.
And now what I'm seeing too is like, if you saw if you were on the spaces yesterday, the Frax birthday space, right?
Mm-hmm.
They, I heard Sam say, that the Frax chain is going to be getting the incentives in VEFXS, in locked FXS, he said. And I was like, whoa, there. I was like, locked on. Like, I was like, no way, this can't be, this is shocking. So now what that's going to do is I think it's going to open up the door for liquid staking or liquid staking tokens like CVX FXS to be offered as a liquid version of these locked emissions.
Mm-hmm.
So think of it this way: you're going to have Frax chain running, and as it's running and as apps are on there and using the chain and incentives are delivered, they're delivered in a locked form. And then, there might be an option out there where if you want to have it in a liquid form, it automatically locks into Convex if you claim it as CVX FXS. So now you're getting all of this activity from Frax chain delivering FXS locks to Convex.
Mm.
And that, I don't think people.
You know what reminds me of? What reminds me of that we just saw recently was the Prisma lock drop.
Exactly.
Yeah,
it's the Prisma lock drop in reverse, but using it at the base level of the chain. That is,
I think actually that just kind of clicked, right?
Clicked.
Because I hadn't thought about it that way.
Bingo.
But that makes a lot of sense. So, you could accept let's just say it's a 1-year lock on VFXS. So like the idea that Sam was talking about yesterday is that like if you have a reward set and you're giving out more rewards than what it costs to make transactions. So say like you're giving out $2 for every $1 of transaction you run through the network. People just sybil that, right? They'll just fire off as many transactions to arbitrage and suck as much value as possible. But if you have some sort of locking system in it, like the VFXS, or in this case, what would convert to the Convex lock drop there, then you can give away more than $1 because people have to take the duration risk of saying that
the claim in CVX FXS is like, say, 50% of the value of, or maybe it's even less. I don't know. I'm just
it could be the entire thing, because
it could be. Yeah, it'll be the entire thing, but it'll be all up front. Oh yeah, you're right. That makes sense. Just like Prisma, it'll be
Just
the entire thing up front. And so you can either keep your VEFXS locked for a year, or you can have all of it up front as CVXFXS. And then the sell pressure would go there and not on FXS. But then at the same time, Convex is gaining all of those locks. And so what does that look like, when you have a base level, base chain, incentives going that way? It's very similar to Prisma in that right now the farming rewards are automatically getting locked into Convex.
Yeah.
So
yeah, Prisma's been pretty incredible to see them launch this year. I think that we learned some key facts about how Liquidity is structured and some of the downsides of Liquidity coming into this year because of rising interest rates.
Yeah.
If you're not able to affect the parameters of the borrowing rate when it comes to a Liquidity style fork, like people, it just drives the collateralization ratio too high, and people will move other places. So I'm really impressed to see the small changes that were made for Prisma. It's only a couple, right? Like they added LSDs, so you can use LSDs as collateral. They changed up some of the parameters so they can be adjusted. So like the interest rate parameters to either raise or lower them in the face of interest rates, like the core base Fed rate. And then just the ability to direct emission rewards at the different pools in like a long-term manner,
including curve pools,
not
just the Feasibility pool or all the ones on the platform. But yeah,
it's interesting how like all these different protocols that are kind of connected into Convex are now starting to share different ideas and learn lessons from their deployments as they iterate and add more functionality to their DeFi systems.
Yeah, it's really impressive. I'm really excited for what's coming. I think that between this PayPal news and Prisma and FXN, and now this the Frax chain, incentives being locked in. I mean, I'm speculating that there's going to be a CVX FXS liquid, version of this, because it makes sense. Like, if they don't do that, what's the incentive for the chain, for Frax chain, if everything that you earn is locked up and there's no way to unlock that at all? I mean,
you're right. That makes a ton of sense, because I was thinking about that as well too. But with Convex, you can just wrap it and unlock it immediately. And
and they're keeping that very tight-lipped. I mean, Sam didn't want to give too much information, but I jumped on it, and I think I got my answer. I just, they're not going to say, he's not going to say immediately, flat out what's happening. But yeah, I think there's some behind the scenes work going on there.
So Ryan C asked in the chat, any thoughts on Conic?
I think they're staging a really good comeback. I think they're going to be a supply sink for CRV USD. I think it's going to potentially, if it works well, I think it's going to lower the rates. Like we saw back when they were using, they were going to be, I think they were going to start incentivizing those pools, and that was going to cause the peg keepers to allow, lower rates and then increase the CRV USD supply. So I think Conic is going to play a major role too. I can see that.
And Mitch is actually like one of the largest holders of Conic now.
Yep.
Yeah.
And there's a reason for that, because I think it's kind of, I see Conic as sort of the turbocharger for CRV USD.
Yeah, that's right. It was supposed to bring liquidity through the Omni pools into Curve. And Michael was actually one of the people who helped kind of bail out Conic when they had their unfortunate security incident. Security incident a couple months back. So
I think he probably even looked at the code himself, at this point. So I would feel very comfortable there. And those Omni pools are going to be, there's going to be huge deposits there for CRV USD, big APYs, huge incentives. I think it's going to be really, really good for CRV USD for sure.
So what are your narratives going into 2024? Like, this is something that we talked about last year on Flywheel, and one of mine, or at least one of my core ones, at least in response to Frax, was that the curve wars had to kick off again, really to jumpstart DeFi, because we had seen kind of diminishing of Frax, diminishing of Convex, Curve, like the entire ecosystem had kind of like drawn down a bit. The current CRV price had essentially come back down to where it was when it launched. And really it looked like there had been an exit of interest in liquidity across the Curve ecosystem at the end of 2022. And my thoughts at the time were like, if DeFi is really going to kick off again, if we're going to go back into DeFi Summer 2.0, Curve really has to lead the way, because it is the liquidity hub and liquidity engine for the rest of DeFi.
I agree. I think that's probably a very big one of mine too. Like there has to be more incentives. There has to be more voting. And I think that like for right now, Frax has really been kind of the driving force, when it comes to Vodium incentives. Mm-hmm. And I don't think that's a flywheel, if that makes sense. Like it doesn't really make sense.
You can't just have one party, right?
Yeah. You can't it's obvious, right? Like it doesn't make any sense. So you're gonna have players now come in like PayPal and Trident and other.
But even if it's Prisma, even if it's FX and Prisma, like I think my thoughts in 2022 was that like as a protocol's protocol that Convex is, in order for it to be successful, it has to add in more participants into its ecosystem. You have to have new large players coming in and purchasing CRV, and I think we saw that with the distribution of CRV that happened when Michael's lending position was threatened. In Q3, that event itself unlocked a lot of CRV for people who wanted to get access to the long-term Curve incentives, and wanted to deploy significant amounts of capital. Because an unfortunate side effect of the Michael's position and him having a large stash of CRV is that people who do want to deploy significant amounts of liquidity probably would face a good amount of slippage when they're coming in to make those purchases. So the ability to buy that at a discount, and I think most of the people locked it up as well too. They just like
that was a huge amount of locks. I think when the whole hack started, I think there was like 700 million CRV locked, and now we're like 778 or 780. Like, there's been 80 million since then in the last 5 months or something.
And I think he sold 120 million CRV. So if 2/3 of that got locked up, I mean, that's a win for the ecosystem in general, because the more that Convex is able to distribute and have a greater diversity of holders and kind of like spread the amount of the VECRV voting power around, it's beneficial for the entire ecosystem, because it just means that there's demand from multiple parties and not just like a single monopolistic player like we saw back in 2022. So this year, I think, has really been a revitalization of Curve, which has had broad effects across the entire ecosystem. Thankfully, it's been product driven and not just like speculative driven. Like we can look to see everything that's been deployed this year: CRV USD, which has been a hit, Prisma, FFX, all the stuff that's happening in Frax as well too. And so like it's really been fundamentals driving it, and not just speculative trading.
Definitely fundamentals. I can see that for sure. I agree. Like I think that I see a world, and this is not financial advice and whatever, but I see a world where Curve is probably back up to $10, at the peak of the bull. You'll have like Prisma at $10. And you'll have FXS at like $100, and maybe even more. And God knows what FXN does. But all of these in combination, if you think about it, like what does that value accrual look like for CVX? What do those incentives look like on Vodium, going forward after something like that? Mm-hmm. And I'm not even like this. These are not even like crazy numbers. Like Prisma is $1 right now. It can easily 10x. I don't think that's crazy. CRV was at the peak last bull was at 6. So to me, like those are just normal numbers for a bull market. They're not even crazy numbers.
I'm looking at Curve's at like fully diluted. So Curve right now has a market cap of $500 million, right, and fully diluted value of $1.2 billion, which seems low, really. It's kind
of low when you think about grand scheme of it.
Yeah, like I could see Curve as a $100 billion protocol 10 years.
Well, that would
in the
be
future.
phenomenal. I mean, but yeah, I mean, I think. I mean, I'm shooting for 10 billion, but yeah, I think in the long run, if Forex and all of these things that we're talking about happen, then it's easily $100 billion. You know, I mean,
Yeah, because the kind of end goal for the end idea for Curve is that it becomes a place where like all currency swaps take place, both crypto swaps, FX swaps.
yeah,
And it just is able to house like billions and billions and billions of dollars.
and I think the beginnings now of PayPal and PYUSD kind of there's sort of peaks into the world of what's going to happen. Like if that takes off, then you're going to have other stables, and then who knows? Maybe you get nation states involved, and it could be huge. But yeah, I see the Curve model makes a lot of sense for all kinds of trading and Forex trading for sure. And I'm excited to see what's going to happen out of that. I think it's going to be impressive. So yeah, I think it's going to be a good year for the Curve ecosystem. I know we had a bad year last year, the hack and everything going on, but I don't think that's we're already moving forward past that now with the repayment. I think past really flying colors. So that's positive for Curve too.
Yeah, I just look at I'm just pulling up the S&P market cap, and the top companies like Apple has a $3 trillion market cap. Microsoft has a $2.5 billion market cap. Google or Alphabet, whatever you want to call it, 1.5 trillion. Amazon 1.3 trillion. Nvidia 1.3 trillion or 1.1 trillion. And Tesla's at like 800 billion. So like Tesla and Bitcoin are on the same level. And then ETH by itself is kind of like down near what you would value like a Chevron. So Chevron's at 298 billion, ETH is at 267 billion. So when we're placing ETH for what it does in kind of the broader context against other existing TradFi companies, there's a lot of similarities. And again, like I could see ETH and Bitcoin rivaling something or even outpacing something like Apple or Google in the long term.
Absolutely. I'm totally on that. I totally agree with that. Like, ETH is just, and the fact that there's talks and it likely will happen. We're going to get the Bitcoin ETF. It's going to happen in the next couple of weeks, but the ETH ETF, I think is bigger than the Bitcoin ETF. If you think about it, like it's already a lower market. ETH is already a lower market cap than Bitcoin. And, it's already, it earns an intrinsic yield. It's going to be very popular amongst, the hedge funds and the ETF providers. And so once that gets approved, then you're going to see a couple of major stable coins. I mean, a couple of major like altcoins, probably Chainlink, things like that, will have their own ETFs as well. So yeah, I think going into this, it's going to be pretty impressive, the numbers. And I think the ETH ETF is going to be very bullish for ETH and then very bullish for the whole ecosystem. If it's bullish ETH, then I think it spills over into like Curve and Convex and to all of these things, stable coins. So yeah. It's
Ryan says the PayPal partnership could really blow up the whole Curve ecosystem.
It will. And Frax is at the center of it. If you think about it, Frax is at the center of it. And because of the way the mechanics are working for the, hopefully we'll have a PayPal base pool soon. And, Frax will be incentivizing those pools by means of pairing with the base pool. So, we kept talking about, is PayPal going to bribe? Is PayPal going to incentivize? And I think the answer is yes, they are. It's just going to take a different form.
Yeah. Well, we've also got Corey on today. How you doing, Corey, sir?
Hey, good. Corey.
Nice to see you guys.
We were just talking about we were talking about one of my 2022 predictions, which kind of came true. And then we're going to talk about some 2023 predictions for next year as well, too, or 2024 predictions. So last year, at the end of the year, I was kind of saying that in order for DeFi to really come about and be successful again, the Curve wars would have to take off. And we did see that this year. We saw the CRV, 80 million CRV get locked up. We saw the addition of Prisma and FFX and a whole host of other projects into Curve itself as well too. And we've also been seeing like other ecosystems like Arbitrum take off this year. I think that was the narrative that probably most of us missed, was the L2 narrative, just about how big of an impact Arbitrum would make, Optimism as well too, and then the host of other L2s like Blast and all the ones making waves right now. So what's been on your mind? Like what are you kind of thinking about in terms of 2024 as we roll into the end of the year, Corey?
I think we're going to see a lot more discussion and activity in governance, DAO governance, that is. I feel like every single year there's some predictions surrounding DAO governance and how DAOs are going to take off as a concept. And I think that, like, speaking about it in broad terms, like, it's a very easy and simple prediction to make. But I feel like there's been an evolution that's occurred over the past couple of years with these organizations becoming a bit more tighter ran. I mean, also kind of, I would say, like, legit, making themselves more legitimate in the sense that they're being run more properly and actually accomplishing things. Beforehand it was more like a hand-waving term, like, oh, we're going to become a DAO, or we're going to start to do things more purely on-chain. But we're starting to see a lot more of this really come to fruition in a more, dare I say, utopian way, especially with protocols like Arbitrum, considering how much they've really flipped a switch essentially and fully went towards the DAO model and gave the community control over everything.
Yeah, Arbitrum's been a really good kind of petri dish for DAO governance this year, because there's been an incredible amount of incentives that have come out through Arbitrum and a lot of proposals to try to take advantage of the Arbitrum treasury. And the DAO has kind of gone back and forth and said that some incentive programs like the STIP program are great. We should try those. We'll even backfund some of the projects that made the cut but didn't get enough votes. But at the same time, some of the other proposals, like I believe there was like an Arbitrum DAO Council, and there was a few other proposals as well too, which came from insiders within the community, but at the same time got shot down just because of kind of either a lack of political will or just not enough political siding to make them happen. So it's been really interesting to see the entire scope of what's happened with Arbitrum governance this year.
Yeah, I think the one you're thinking of is the coalition vote.
Yeah, the
Arbitrum coalition. Yeah. And I think one of the key takeaways from that vote in particular, and just where DAO governance is as a whole right now, is people are pretty scarred by the idea of, let's form this generic thing that's supposed to do this theoretical duty and fund it with a lot of money, because there's no real budget in place for it. Like, you could say, oh, we're going to allocate this money towards XYZ thing, but usually the XYZ thing is extremely broad and generic.
Mm-hmm.
We've seen examples in the past of Uniswap or Uniswap Labs submitting proposals to create a fund for a legal fund for funding research to universities and things. And in general, like, these are things that I'm heavily maybe for from a 30,000 foot view. But in terms of their actual execution, I have to stand as a very hard against at this point, because how we've seen the funds really get utilized is not necessarily all that efficient. People just see, or they have blinders on, and they basically see large numbers on a screen, and they don't really treat it like every dollar is as important as it should be. And when we start to see that creep into Arbitrum governance with this coalition, I think we started to see a lot of the similar sentiment start to come out of, hold on a second, we've seen this before in a somewhat different format with other DAOs, and we know how this ends. So if we want to do something like this, it needs to, we need to make sure we're bringing down the level of responsibility and control considerably to really make this worthwhile. Turn this into, as you put it rightfully so, a petri dish, where it's more of a microcosm of a scientific experiment, mm-hmm. compared to like, oh, let's just throw all this money into here and see what happens.
Yeah, because it's very different when you're talking about like like a DApp or like a protocol like Cryptovestor. You've been doing work with the Latin DAO guys.
Yeah,
Corey, you've been you're running Dolomite as well too, and so like on a more granular level, when you have like app specific or clear mission goals on growing a protocol, it's probably a little bit easier to say and get eyes on these proposals, right? But when you get to these the large scale, right, like you're talking about the Uniswaps or Arbitrum or really anything that has multiple actors with multiple visions of how a protocol or idea can proceed into the future, that's when it becomes a little bit different. Yeah, the alignment's not always the same.
Yeah, exactly. I think that once these protocols start to grow sufficiently large, where just staying in their own vertical is not like the biggest or the best way to grow, you start to get these very broad and ambitious visions of what could basically be in the future, and that's when they start to get really lofty with spending and have very little to actually show for it. You know, we saw this with Uniswap being a prime example of them really dominating the entire DEX vertical, and then eventually wanting to become like an advocate for all of crypto. And I don't want to draw this analogy too closely because FTX obviously went down in flames for committing fraud, but it is similar in some ways because Sam wanted to take all that money that we thought he was making and use it for advocacy for crypto on like the world stage, and it doesn't always manifest the way that people want it to see. It's not allocated the most efficient way, so these are bad things we have to be mindful of.
Yeah. What are you seeing for Arbitrum for 2024? Like what's on the kind of big picture roadmap that you're seeing?
So speaking at it more from a product side and the builders that I'm heavily interfacing with on a daily basis, we're seeing a lot of builders really coalesce and come together to reach ecosystem level initiatives. And a really good example of this would be like, Arbitrum, of course, it's its own layer 2. It has its own assets. It has really deep liquidity for someone like the blue chip majors like ETH, BTC, blue chip majors that are native to the Arbitrum ecosystem as well, like GMX. But where it's lacking is, assets that reside off of Arbitrum. So like Solana's token, of course. There is no deep liquidity for that on Arbitrum. And so we're starting to see situations where builders are trying to coalesce to find ways to bring assets like Solana onto Arbitrum, despite the fact that there is no real liquidity for it, doing it in a safe way that would make the entire ecosystem happy. Because even just the process of bringing over a new asset like that is not that trivial, because you have to deal with potential bridging issues and other things like that. So doing it in one way implicates every other protocol that wants to integrate it. So builders have started to recognize this, and they're trying to, like I said, work together to try to solve this as an ecosystem level problem, which in my opinion is really exciting, and it shows the maturity of the Arbitrum DAO and governance as a whole, because we haven't really seen any layer 2s or even alt layer 1s successfully bridge over other alt layer 1 assets. Like we don't see Solana's token thriving on Phantom, for example. We don't see AVAX's token thriving on Optimism.
Or even some of like the older L1s than that, like Ripple. We don't have a wrapped Ripple token. We don't have a wrapped Cardano token on ETH that is in size and that people use. I can see it as like we're deeply scarred from all the bridge hacks that happened.
That's true. Yeah.
Yeah. Like
it makes sense.
Bridges are the biggest honeypot in the entire space. Like 80% of all the money that's ever been stolen in crypto has come from bridges. So I can see that. Like you either have to have like a centralized issuer that is acting in this like with WBTC, or through like a Binance or a Coinbase and how they issued their LSDs. Yeah, I think that's a really interesting point that Solana is kicking off, and we might see some huge growth in Solana this next year. But how does that integrate with all the L2s that we have? How do we merge those communities so that we can have both Arbitrum and Solana or Optimism and Solana, or really any kind of networks merge into each other?
Sam, you've seen, or I guess you did an interview with Addison, right? And what they're doing over there at Chainflip is, I think that's going to be one of those narratives too, this year or in 2024. Like you're going to see, pretty complex spot dexes out there that are going to kind of let you move assets around pretty freely between all of the different L2s, different L1s, and I think that's something else that we need to be mindful of too.
Yeah, because I don't know how much you guys have used Solana in the past like year or two. It really went through like a trough where they lost almost all their TVL. I think it went down to like 100 or 200 million dollars.
Small, yeah.
Which was pretty incredible for what they had built over there, and now it seems to be returning. hopefully the ecosystem can grow and we see a reemergence of Solana at a grand scale next year.
And I think we're going to see a lot of them. I think Solana will do well. I think there's, I know, we're probably very heavily into the ETH side of things, but the truth is, like, there's a world with many different chains and for many different reasons. And I don't subscribe to just one. I haven't really used Solana, but I'm sure that there's going to be a time or there'll be an opportunity when it makes sense for me to do that. But the new technologies are going to emerge. There's going to be faster chains, and but there's going to be reasons for people to settle with mainnet on Ethereum. There's going to be reasons for people to need things like Solana, for speed.
Yeah, Corey, have you guys been looking at all at this modular future, like the modular blockchain thesis, and how it could impact applications like yourself over the next few years?
Yeah, I just want to be clear that we're looking at the same definition here. Do you mind just explaining what you define modular blockchains as at this point?
I kind of understand it as unbundling the monolithic infrastructure that we have in ETH, and separating data availability, consensus, execution into different layers, so that we could have like Celestia or Eigenlayer handling data availability, or like Suave that's being run by Flashbots to help with execution, to really like break up these services to make them more efficient, potentially like semi-centralizing them, some services, through just market demand, but at the same time helping lower costs for all participants, and just opening up the scope of the amount of infrastructure that's available, and data that's able to be processed, and block space to be able to be used.
Yeah, sure. I mean, looking at it from that perspective, I think like as a builder like myself, that we're very focused on deploying smart contracts in the EVM and providing services. I don't think that there's too much relevance to those things, because at the end of the day, like, our usage of the EVM is our usage of the EVM. That's not going to necessarily change. And the core principles that we have to abide by of like how our smart contracts can interact with one another are not going to necessarily change from these features either. That's one of the things that Ethereum has done extremely well with, is as they want to roll out new things in the future or potentially move over to more of this modular design, it's always done in a non-breaking way where dApps that are deployed can continue to rely upon the Ethereum virtual machine, the blocks, or I shouldn't say really the block space, but the storage space that they've been allocated to their smart contracts, that they can continue to use them without hiccup during these upgrades as things move forward. I think
I think the thing that I wanted to kind of ask about is that there's almost been like a natural trend for protocol apps as they get to size to transition towards their own app chains. So I think Compound was one of the first to come out and propose like a Compound omni-chain, so they could move assets around. That was even before the whole L2 craze. That white paper came out in early 2022.
And they wanted to call their thing Cash, I think, or something like that.
Yeah. So we never saw that, or we haven't seen it yet. Maybe it's changed now with the introduction of all these the L2 ecosystems. They don't need to build it themselves. But if I look at like a participant like GMX, I can't 100% say that GMX will stay on GMX will stay on Arbitrum for the next 10 years, right? It might make sense for GMX to launch their own app chain, similar to what DYDX has, and move liquidity over there, and then I don't know, use Arbitrum or any of the other L2s as a way to like bridge into their ecosystem.
Yeah, I'd actually love to share my opinion on this. I think the key thing with deciding to go down more of the app chain path is if you should exist as your own sole application, and some of this might boil down to who's leading the protocol, in this case who's leading GMX, and what their views are on the app chain versus composable dApp thesis. But at the end of the day, if you consider yourself to be successful because of the composability that your application offers, you're not going to want to necessarily leave Arbitrum as a general compute layer and move over to your own app chain. And it also depends on how you're structured from a smart contract architectural perspective. Because DYDX has this hybrid model where they have an off-chain order matching engine, but then settle all their trades on-chain. Well, as we already know, off-chain order matching engines are not composable on-chain. There's no way for a platform like 1inch to build into their DEX aggregator a way to swap using DYDX orders if they offered spot liquidity. It just doesn't necessarily exist. So I think that because GMX has really tried to build their perp platform as on-chain as possible, and then when you look at more of like the leadership over there, they always talk about how they think that their composability with the rest of the Arbitrum ecosystem is what made them so successful. I think it's very unlikely that you'll ever see them move over to their own app chain, provided that the leadership stays in place where they are and they don't want to necessarily go too far astray from what they're currently doing. They really try to build out their superpower to be friendly and cooperative with all these other protocols that build on top of them. That gives them their value. And you lose that when you go to your own app chain.
Yeah. And that kind of like ties in with what we were talking about in the first half of the show, where, Convex as the social layer for liquidity on Ethereum kind of ties everything together. Because everything is so composable, you can have mix and match services between, say, Prisma and Frax and Curve and Convex, kind of like all going back and forth together. And same thing for you guys as well too, and how you mix and match all the different ecosystem assets that are on Arbitrum as well too. Like without that composability, it just wouldn't be made possible.
Yeah, exactly. And I think that's a really, really good point. Overall, like Dolomite, we consider ourselves a DeFi hub. So if we put ourselves on our own app chain, where we have to provide and basically build up all of our own liquidity for any asset we deploy on there, it's probably not going to necessarily go so well for us.
Yeah.
But on the flip side of that, there actually is a really strong use case to be able to settle assets across different networks. In this case, going from an app chain back to a general compute layer. And I think that what Dolomite might do instead is, instead of going down that path of wanting to situate itself on an app chain, then connect everything to it, we instead want to basically have these different hubs on different networks that we think provide very clear value. So right now we're in Arbitrum, of course. We're looking at other networks that could be interesting too, like Polygon ZK VM. We want to situate ourselves on there and then be able to communicate with all the different, layer 3s, if you will, that are built on top of Arbitrum or built on top of Polygon ZK VM, to be able to interact with them in a as efficient a way as possible, to be able to provide that really core experience to each of these networks that act as their own like hub or flag in the ground.
Yeah, I put this comment up earlier, but we had Abracadabra or MIM earlier on, I believe like a week ago or 2 weeks ago, and they've gone the omni-chain route where they are using layer 0 to be able to bridge MIM around seamlessly between networks. And maybe that's the answer, right? Is to go the omni-chain route, have these like deep omni pools that you can move between one network to the other and still have the same app services that you would have anywhere, and potentially be able to take out like cross-chain composable debt in the case of like yours, right? Where you could post up collateral on Solana and take out debt on Arbitrum, right? That would be pretty interesting. But I mean, it's incredibly complex to facilitate.
I think it works relatively.
Sorry, Corey, just saying that seems like a lot of it is coming soon with layer 0 and Tapioca and stuff, right?
Yeah, no, that's also what they're working on. Could be seen as that. I think in general, like that omni-chain route works extremely well for more of those CDP platforms that issue their own stablecoin, basically have mint and redemption control over it across different networks. Because Abracadabra has complete and total control over MIM to be able to do these things, they can natively mint it on these different networks. And at that point, they're really just relying upon layer 0 as a messaging layer to actually execute these mints and burns accordingly. So if you have cross-collateral assets that make sense or have liquidity across different networks, then I think that this could work really well also for a more general lending protocol like Dolomite. But if you're looking at very specific collateral assets like an LP token that's specific to the Arbitrum ecosystem, it's not necessarily the safest or best thing to offer really cross-collateral in that case across different networks.
Yeah. So I'll bring this back. DeFi Advisor, what's kind of your like big narratives for 2024 that you're looking at?
Oh man, wow.
I know I put you on the spot. First question here.
Good. I think that on the larger scale, I think there's a huge discussion of if macro is indeed coming, if institutions are indeed coming, and I think it's the biggest deal, because I think if ETFs are coming, and I don't know, at least some folks say that they're coming like really, really soon, then in my opinion, the game changes completely. because the amount of money and liquidity can really, in my opinion, even like double itself within a very short period of time, because that's a whole other world. But on some of the other aspects that I'm looking at, I think that option protocols are gonna start getting a lot more attention. I think that we talk a lot about gaming, and I'm pretty positive that we're going to see some developments in 2024 with some new user at least attracted. And I think that another point that Corey mentioned is also very important. It's going to be very interesting to see how, as an ecosystem, we start working together, and not only just as like single projects or with single products on a single app. Because by now, a lot of these builders have been building like relentlessly for a few years. They know each other, they have connections. This guy likes that guy better than others. This can create all kinds of coalitions that are going to be very interesting to follow, or federations, like I think Noah Seidman calls them a lot on his streams. I think they're amazing streams, really. Because and by the way, that's something that is very similar, in my opinion, that's going on with Curve. I think that Curve already has like a vibe in a way that is bigger than just the protocol itself. So many protocols are coming around it. Like there's now a Curve ecosystem, now not just a Curve protocol, stuff like that. And for most projects can't say it yet. And I think that 2024 can definitely. I started crypto in 2020, and honestly, it was as crazy as possible in many ways. But I think that, on some scenarios, 2024 can be even crazier. And, hopefully for the better.
Well, we've Cryptovestor and I were talking about this, about how PayPal might be the big, the big entry for next year.
Definitely can be huge. We also mentioned it on our A-Team Twitter space a few days ago, because PayPal. First of all, I think that PayPal can really like affect the market, not just by whether their stablecoin has a blacklist option or not a blacklist option or stuff like that. The amount of awareness that and usage that an entity like PayPal can like inject into our industry, and like the validation that it can get out of the common person out there that knows nothing about crypto, knows nothing about Circle and stable coins or whatever. But once they start hearing PayPal, it's gonna automatically validate this whole thing called stable coins to so many more people than we can now even imagine. Like no one knows most of what we're talking about, but PayPal is something that everyone knows what PayPal is.
Exactly. So just doing a quick Google search, PayPal has 435 million users.
That's insane, man.
Yeah.
That's insane, man.
Bridged in.
Barbarians are at the gate, guys. That's what you guys don't realize. It's like they are at the gate right now. And I do think 2024 is going to be, the year of the stable coins. It just is. It makes sense. And I think this just shows, 435 million users. I mean, they're going to have exposure to DeFi through Frax. I mean, literally through Frax curve pools. I mean, that's insane. We're not bullish enough yet. We will.
Maybe that's the thing, is that we're not bullish enough. Like we all forgot.
Yeah.
Like I think we all forget about like how much prices can move once markets start to go. Like it really is pretty unbelievable. And we haven't seen that. We've seen some froth, like that guy who made $10 million on Bonk and didn't want to sell.
There's
you always have characters like that.
Yeah.
There's some select areas like that, but when things start going, like this live stream is going to have 500 people on it, and it's going to be that you're not going to be able to read the right hand side of this thing. Like we're not there yet, but we will be there. I think it's 6 to 8 months away. We're just slowly creeping up.
That's surreal. That's going to be surreal, guys.
It is going to be
surreal. Crazy. Like when you see, if we are able to get Leviathan to be a big show one day, and just like you've described now, it's going to be so surreal in a way.
Mm-hmm.
And guys,
I saw this tweet that they sent you a few, like I saw it yesterday, and I think it really touches the point we were mentioning. We must remember not to aim too low. It's better to aim too high than too low in many ways.
Yeah, we're all aiming really low right now, but I think that's going to change. And, I think that the stablecoin narrative is a powerful one because it's something that everybody can use. And I think PayPal will be a big driver of that. And I think protocol effects, I have to talk about them. Like, I just think that, that what they're building now with FXUSD, their new stablecoin, I think that's going to revolutionize too, because you have that. What I love about it is you have Frax on the one side who has that native T-bill yield, right, with SFrax. And then on the other side, if you want to just earn, native ETH yield, you use FXUSD, you stake it, and you get the underlying ETH yield. And that's going to be a huge narrative moving forward because some people want the decentralized, version of a stable and then want to be able to earn passive income with Ethereum yield without price volatility. And then, and I think that's what FXUSD and Protocol FX is going to offer. And then it's also going to offer, benefits to the LSDs too at the same time, and a huge incentive mechanism for the LSDs to incentivize the corresponding rebalance pool. So I think that's going to be huge.
Yeah.
By the way, I got a little question for Corey. Especially with an entity like PayPal, like, do you see a future in a few years, Corey, that people are going to be able to access Dolomite products at the backend while using an interface like PayPal or one of the other companies? Like, do you guys even discuss that or what?
Yeah, I mean, I think that's the future that we're heading towards. And I like that you called it like using Dolomite on the back end, because I think those protocols that really prove resilience over time and have that staying power are going to be exceptional layers for platforms like PayPal, centralized entities, market makers to tap into. I mean, already today, we have seen like that entities like Falcon X, which is one of the largest market makers in crypto, when they want to underwrite a market for some of their clients, they'll actually source their capital from Aave, put up collateral for a loan, borrow stables against it, even borrow alts against it when their clients want to short an asset, and they'll charge a spread on it basically. Aave's done an exceptional job proving its resilience and being able to serve as a trend and interest setter for the overall crypto market. And I think that as Dolomite's able to fight its way into those conversations of being one of those top players with that proven track record and with deep liquidity, we'll be able to see it happen more and more with some of these other protocols as well.
Yeah, also I think that the protocols like yourselves and the others are actually going to provide so many opportunities for big entities like PayPal in order to leverage them for themselves, because it's going to be much easier for many of them to be the one introducing these actual services to the audiences that they already have than to get so many DeFi teams and projects to bring awareness to themselves. So I do think that these entities are going to have a huge role in it. But the most important thing is for us as an industry to be that Trojan horse in a way in there, to make sure
Trojan Horse's DeFi advisor are BRC20s and Inscriptions. This is actually what we're all sleeping on, and we are going to see a full PayPal deployment over on Bitcoin at some point as Inscriptions. We'll see.
Yeah, that's a program like a TI-89 calculator too.
Actually, I want to, Corey, can you talk about the Arbitrum shutdown that happened last week? Were you like, sure. How did it affect you guys? Because Arbitrum went down for about an hour. People came over, they started like minting Inscriptions out the wazoo, overloaded the sequencers, and they had to essentially probably restart the system. So did it affect your markets at all? Was anybody liquidated? What happened?
Thankfully not. I mean, during that time period, there really wasn't too much volatility. If we had like an FTX level event happen at that same time, it would have been very problematic for us. But the key thing though is like, if it were down for a prolonged period of time, we could have taken the resources to allocate like building something on layer 1 so we can communicate with Arbitrum from layer 1. And this is one of the key distinctions between like an actual layer 2 versus some of the ones that Handwave has it, versus alt layer 1s completely, is that as long as Ethereum remains active, there's a way for you to force include transactions on Arbitrum despite the sequencer being down. And that's a really, really important distinction that doesn't necessarily exist with other networks. And it's one of the reasons why we actually chose Arbitrum as our first network to deploy onto back in 2022, when the layer 2 ecosystem was much younger. It was really important for us to be able to have that availability all the time. So even when crazy things happen, like FTX shutting down, which thankfully did not take down the sequencer, or completely unexpected things like Inscriptions clogging the network, and it does take it down, we have this option to chase after if we need, which offers users that peace of mind that they don't necessarily have elsewhere.
Yeah, I mean, I guess are you able to pause markets or anything? Because like what some of the lending markets on Solana when Solana would go down multiple times, back when it was going down, they would essentially just pause markets and say like, okay, like we're gonna unpause markets in 8 hours or like an hour or something like that, and you'll be able to adjust your positions. You can top up collateral during this time period. Nobody's going to get liquidated, and then we can move forward. So is that possible to do with Dolomite from the ETH chain?
Partially, but we don't necessarily have the infrastructure in place for it at the moment. We haven't focused on that yet. But we do have the ability to basically like turn off the price feeds, which would stop all transactions, topping up. That would include topping up collateral as well as processing liquidations. So it's more of a situation where like we just put a freeze on everything, and then we kind of like will quote unquote figure it out after the fact. To at least speak to your Solana example briefly, if the network's down, the network's down. There's nothing they can do about it. What happens is that as soon as the network goes back online, it's a race between who the fastest liquidator is and the operators of the protocol to submit that transaction that will pause before the liquidations go through. And if they aren't fast enough, the liquidations are going to get processed up until the point where that pause transaction does go through, and it actually effectuates a freeze on the entire system. But like I said, because we have entities like Chainlink, they actually will monitor the status of the sequencer, and they'll post a transaction from mainnet to Arbitrum that basically does that. So we don't need to necessarily even build out too much infrastructure on layer 1 to even support this. We already have the ability right now so that if the sequencer goes down, it basically turns off Dolomite along with it. So there are no unfair liquidations or things that happen while it's offline.
Yeah, that's pretty cool. That's pretty cool. I'm just blown away by the inscription mania that's taking place.
So am I. It's I'm in this industry for the past since 2015, and it's like that old saying, like, I didn't see this in my bingo card sheet for the year. Like, these things that just pop up and you just never would have expected it.
Yeah, I never would have expected this on Bitcoin. It just,
such a good.
I will say it's making me more bullish on Bitcoin. For the longest time, I've been very bearish on its long-term future because the halvings, of course, half the fee revenue that goes to or the block rewards that go to miners, and the fee revenue was not sufficient to actually sustain the network. So they're going to eventually reach this kind of death spiral where
I've been in that doomer camp before. I've been in that doomer camp saying like, Bitcoin, they won't be able to make enough money. Like nobody's paying for transactions right now. Like more and more Bitcoin transactions just keep getting routed out to like Lightning or even on EVM as well too. So if you can make cheaper transactions on Bitcoin, like what's the need to pay for high Bitcoin transactions on the base layer? But in reality, all you got to do is add some monkey JPEGs in and let people go to town with inscriptions.
Yeah, I mean, if this trend is able to stay for the next number of years as more halvings come through, then this could be the thing that really saves the network, which would be really exciting. No one wants to necessarily see Bitcoin go down, but it's just one of those things that me as a cognizant investor as well as engineer, I just can't ignore it.
I also think
the question is, are we going to really see like truly EVM, huge EVM apps on a layer 2 on Bitcoin? Like, is that what's are we going to see Curve on Bitcoin?
Who knows? Should us get it?
I mean, is that possible?
I don't know. I mean,
what are the gas fees going to look like there? I don't know if it's technically possible. Maybe it is.
I think the real question is like, what does Bitcoin MEV look like, right?
Oh God, well, you have 10 minutes to figure that out. So
that's
going to be crazy. But the other thing to consider too is like the programming environment right there. Like I already threw the joke out there earlier. It's like programming on the TI-89 calculator. It's still extremely elementary, and the way that people are even processing and creating these BRC20s, it's like the biggest anti-pattern that you've ever seen before. So the reason why you see some of the Bitcoin core people really freaking out about it and calling it like a hack on the network, and they don't want this stuff and they're trying to purge it out from there, is because it is an anti-pattern the way that they're using the network. It's
Right.
it wasn't designed for doing it, although technically it supports it. So people are, if you want to call it exploiting that, they're exploiting that. Some people are just saying that they're using this feature that wasn't really heavily used before. You know, for me, all I see is that Bitcoin's processing more fee revenue, and miners should be happy, which means that the network can stay healthy for that much longer.
You
So
know,
I look at it.
I'll be the contrarian here. I think that I don't know. I don't see it. Like, I think that we'll have a run. I'm sure BRC20s will do really well. I'm sure millionaires will be made out of some of these tokens. There will be some activity, minimal activity, but I don't know if long term it's sustainable. It's something that, from a gas perspective, from an MEV perspective, from a programming perspective, it's even possible. Sure, maybe some rudiment, unless someone builds some kind of Arbitrum-like kind of solution that's EVM maybe that's possible, but I don't know.
The point though is we need some kind of VM on there, something that makes a programming environment actually friendly and easy to use.
Right.
That we can, have Turing completeness. We can stand up an entire ecosystem, be able to process transactions really easily for generic compute. But
I mean, remember 3-4 months ago it was Friendtech, and then it was Blast, and there's just always these kind of things. Now it looks like BRC20s are have a little more staying power, and that's good for the fee revenue. I agree with that, but I'm just questioning whether or not it's possible, unless someone really does build a really truly compatible EVM L2. If I see that, then maybe it'll work. But where does that leave it?
We're getting there. I mean, we had on Botanics a couple of weeks ago. I think we all know Stacks as well too.
Yeah,
is trying to build something interesting. So I think there are a lot of people who are trying to build L2s on top of Bitcoin. I think it's just questions of implementation and who gets there first. I mean, it's people have been trying to do this for a long time. I don't know if you guys remember Rootstock.
Yeah.
Tried to build something. I don't.
Well, there's still Lightning out there. I mean, Lightning isn't even fully, deployed. Like, people don't. I mean, yes, you can use it, but it's not very, very common. So,
I'm very for Lightning. Like, I think Lightning. If you're thinking about like an exchange setting of building out a way for large institutions to send Bitcoin back and forth between each other to balance out trades, Lightning's perfect. Because it settles instantly, and it's incredibly cheap. I don't think it has the ability to add in DeFi onto it. Hopefully soon we get stablecoins on Lightning, but I don't know when that's going to be. Yeah, so
I know Frax is looking at that. That'll be interesting.
I mean, I could say for sure that there's enough incentive at this point to build some of these really critical pieces of infrastructure on top of Bitcoin to support more than just simple big Bitcoin transactions, and there's also a huge reward in potentially reaping that. So hopefully one of these teams that are building it can do a good job in doing so, because I would love to see a world where Dolomite can build on top of there too. It's just not feasible right now.
The good thing about DeFi and a lot of builders is that many people used to be Bitcoin maxis when they first started. It's like what their identity was, and then just by the roadblocks of building on Bitcoin and the difficulties that people have had, they've made the switch into the EVM to be able to build and deploy. And now that the design space is opening up in Bitcoin again, I think a lot of people are happy to go back and try to explore some use cases to be built out there.
And also, I think that with the amount of boomer money that's probably coming in 2024 into the Bitcoin ecosystem, I think that these opportunities might even not be at the center or at the focus, at least at the beginning, but these opportunities will keep emerging. And the chance of someone like putting up a huge budget in order to finance some kind of a new L2 on Bitcoin, because he's a billionaire boomer, it will happen. It's not impossible.
Yeah,
and Corey's right. Like, there is a financial incentive, and as long as that exists, then expect something to come out of it. It'll happen.
Yeah,
I don't know how feasible it'll be, but if the economics are there, then someone's got an incentive to do it.
When it's a bull market, it's feasible, man.
Yeah, exactly. Could have like $1,000 Bitcoin transactions to do like something on DeFi.
yeah, but it's worth 10,000. So okay. Yeah.
Well, very cool. Thank you guys for coming on today. Really appreciate it. Corey, it was
Absolutely.
great to hear your experiences and stuff that you're happening building with Dolomite. Cryptovestor, also you. Thanks for coming on today. It was great to hear.
Thank you, and look forward to joining more frequently.
Amen.
And,
My pleasure.
Just
Likewise.
to before we get out of here, everybody go check out Dolomite. They're knee deep or head deep at this point in the Arbitrum STIP. There's a lot of good yields there that you can go and take advantage of.
Excellent.
We've talked with Corey before about the Dolomite incentives, so we'll leave a link to that episode so you guys can go and check it out and take a listen and see how Dolomite is approaching this 3-month short-term incentive program. So make sure to go check it out at was it dolomite.io.
Yep, that's right.
There we go. Well, cool. Thank you everybody for being here, and we'll see you tomorrow.